Well, hello, folks. I'm LA Little, and this is your daily NeoTA wrap, where we take a look at these markets, and we do it from a neoclassical perspective, each time asking ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday, live at 9 o'clock Eastern Time, and archived at YouTube. You can get it there. Usually pretty much after this show is done. We get it posted up there. You can search for it on the channel LA Little. And what happened today, yesterday we were talking about these markets probably going to try to pull back. And it's nice to see that they're, kind of getting back in sync. We're not seeing too much unexpected, maybe is the word, news flow. And that's allowing the markets to try to, do what they should do, at least follow the signals that they're giving us. So if you're a bull, you had to like what you saw today. And I'll explain that here in a minute. But just looking at the ending numbers, pretty much down across the board, but very little, right? Really didn't give much up. The Russell was the only one down 0.75%. The rest of them pretty much flat to down slightly. Gold was up, but gold gave it up. We'll look at that chart in a bit. Silver down 1/3%. Dollar stronger again today. So when you pop in here and you take a look at the charts and you see what happened today, here's the S&P 500. Remember, let's set the table again as to what's going on. And that is that, we have a situation where we had a little retest regenerate zone here. We got over it on Friday, stayed over it on Monday, and actually pushed higher into this big bar. So that says, okay, we're probably in some sort of a range trade. That's the first thing. But when you break 5 swing point lows, you got a lot of resistance on the way back. And the next one, of course, is this retest regenerate zone, which actually was tested already, and which at this point really is more of a resistance zone than a regenerate zone. And that is right there. And you see we came right into it, got to the top of it, got over this bar. That's our June 12th bar. You get over it, back under it, volume lighter, that says you should pull back. That's what we did. But the pullback actually did something positive, and that is that it went back into this support zone, which is anchored off this big bar, the low off that bar. So you go back underneath this bar, less volume, flip around. Now you're slightly under yesterday's low. You didn't actually, I believe, let me make certain of that, but I think that's where we closed. 1933.43. No, I actually closed back into it, which is actually better. So you did everything you wanted today. You got the pullback. You proved that the sellers are not willing to sell at lower level. You flip around and you close slightly back over yesterday's close or yesterday's low. That's about as positive as you can get. That suggests that tomorrow this thing's going to try to get up here and test it again. So S&P's positive, want to test higher. Dow Jones, pretty much the same scenario. It's a little different in that the Dow's weaker. This low is 16,563.30. It closes just underneath it. So you got the same sort of test, but not the same signal. Looks the same, but the numbers don't line up. NASDAQ Composite, NDX, really nothing here. I mean, these are just hanging around in this zone. These are going to try to do the retest regenerates off the swing point low that was broken, and they're going to try to do the full retest regenerate. And it just so happens on these two that they actually have a nice congruent relationship in that zone that you see right there. That's a resistance zone. That's going to be the key area. If we do get back over that area, then we're going to go test those highs again, and you got 2 of them sitting up there. So NASDAQ, that's the one, well, at least the broad composite is the one you want to be watching with respect to how they attack that regenerate zone, and do they regenerate lower or not. You've got the exact same sort of scenario here on the NDX. If I draw it in, and that same congruent type of relationship there, that's the keys. You've only got one swing point high up here, but this is the key area on the way back up. Does it regenerate lower or not? Those tests, more than likely, are probably going to happen tomorrow, the next day at the latest. Russell was a little bit different today. Now the Russell, if you remember, the Russell has been the strongest one on this push back up. The Russell has been unwilling to give it up. Today it does, but that comes after a test of the regenerate zone breaking down here, right? So we didn't regenerate lower. Now we come back into what was previously a regenerate zone that's already been tested once, which essentially means that we're really testing back into resistance. That resistance is anchored off of, let's find the anchors right here. Oh, and over there. So anyway, it's over on this bar. So that's the resistance zone it came into, tested into, didn't have the volume, flips around, comes back down. Today tries to test these lows and get under them and stay under them. If you look at the numbers on those lows, you got them at 1131.42, 1131.83. We close at 1133. So as you can see, you get back underneath them. You don't have as much volume. You flip back around. The Russell, just like the listed issues, is going to try to pop back up and test those highs again. Now, if you want to be bullish, then you're looking at this and saying, oh, well, this is nice. Now we've got an ABCD structure to the top side. That ABCD structure of the top side is going to get you back into what? The next set of retest regenerates and what will be resistance. And that will be, in particular, this one, which is the last one on the Russell. And you can draw the same sort of things. This is the zone here, and you can see it's going to come right up to it. That's the bottom of this retest regenerate. It has been tested before, so they're really going to be resistance zones on the way back up. But you can see ABCDs written to the upside if this thing does in fact take out those highs that it made yesterday. And here it is on the S&P. When you draw it up, what do you got? You got it all the way back to the top of the breakdown bar. Now if you take and do fib numbers and all that, you're going to see that these fib numbers in many cases are going to end up being the 30, what is it, 62.8s. You know, it's going to be end up in that area. And that ABCD structure is going to take you right to what is probably the most critical spot for this market, and that is, can you get over this top? On the way back up, you're going to have anchored resistance as well as retest regenerate zones. You got one there, you got another one here, and the way they line up suggests that it's going to be tough getting back over this area. So that's what's to come if in fact we jump over that high from yesterday. The number is 1944.90, so 1945 roughly. That will be the key area on the way back up. If you look at the sectors, they look about the same. If you look overseas, other than Europe, it looks about the same. And if you look at the OX markets, there's really not much there to tell you anything different. But in summary here, let's pop over and take a look at those, because we haven't looked at those recently in the front part of this show. And I'm going to pop into the FXE. I want to look at the euro and the dollar. Here's the euro. goes down, tries to test, doesn't quite get to it, but holds, flips around. Here's the dollar. Dollar goes up, can't hold it. These are just building out a range, which probably is going to be, on a longer term perspective, an ABCD structure setting up on these to take them higher. So the FXE to go lower, the UUP to go higher. Oil sells off some today. XLE is the index that's struggling the most. Oil gets under, back over. That one wants to bounce again. I haven't looked at UNL for a while. Let me take a quick look at it for those who are interested. And really not much going on there. If you look at the bonds come down today. So they go up, they test, they don't quite have it, right? They had some volume, they test up there, but they can't hold it. Bonds coming back, now they're coming back into the two big bars. That's where they should try to find support, which is right here. That also suggests that the market is probably going to range trade, which is something I suggested before. Junk bonds coming all the way back up to do the retest, regen off that low. And if we flip over to the gold market, actually let's look at copper first. Copper's starting to break down. It's in a big range, but it's now starting to get underneath that range. I'll start with silver on the precious metals. Silver couldn't do anything today, trying to come back into this low. That low is 1936. We got into 1930. Silver still hasn't got back into the big bar, where gold is already not only in but trying to break over, but failing as of tonight. Gets over this high from August 7th, closes back under it, has less volume. Gold's still range bound by the big bar from June 19th. So in summary, if you look at the markets, they're starting to follow their signals again. In other words, they give us a signal, then they do what they suggest. Tomorrow they're suggesting they're going to try to bounce back up and test the upside. For the most part though, these markets look range bound right now. I suspect that's going to continue to hold true. If I take and pull up on the, I'm going to go back and pull up the S&P. And if we look at those ranges that we talked about, the question is that range going to expand? Or is it going to stay the same in this lower range? So let me get the S&P back up. Here we go. So if we look at this, remember we got a range up here that's about right there. And then we've got another one that's right up underneath it. And actually this one comes down a little bit more to those highs. And so this range and the one above and the one below it, about equidistant. This high is kind of anchoring the difference between them. Is this going to come back up and get over this into the higher range and play a larger range or not? That's really going to be the question. Certainly if it does the ABCD structure and actually meets the projection, it will, because it will trade back to the top of that breakdown bar. But the ranges, if you divide this, there's another one inside here, right? There's two inside here. What did it do today? It didn't come back into the lower one. Tested into it, couldn't get underneath it. So it's going to continue to test in this range for now. And then we'll see if it can get into the higher one, or does it fail here, come back, try to get into the lower one. Right now, the range the last 2 days has been up here. Question is will it be this, or will it be back up into here? And believe it or not, you can divide that one up into two as well, and that will be the question on the way back up. So range trades, play the ranges for now. That's what the market's giving you. Okay, for those who want to dig a little deeper, I want to ask some questions. You can pop questions to me, of course. You can text them 303-912-9110. I'll pick those up and try to answer them, or you can send email to me, support@tatoday.com. And again, I will try to answer any questions you have. If you're asking me about a particular stock, I would just simply ask you to give me a direction and a time frame to help me try to help you. So let's see what kind of questions we got. The more the better. I'd rather answer things that you're interested in than to simply talk about those things I'm interested in. So let's see what the first one is here. So will EFA like the GSPC and IWM or not? Will it act like them? No resistance zones on the daily, but there is on the weekly. So let me pop over, let me pop the symbol in so I can take a look at it and see what we got. So I think this is the, excuse me, I think this is the, yeah, the European, this is Europe, isn't it? EAFE? I'd have to look it up. Hang on a second, let me see. So I can't remember all of these. I ain't Jim Cramer. Jim seems to remember everything. EAFE, EAFE. I was always kind of amazed when I worked with him, the extent of his recollection, right? His ability to recall. It was pretty amazing, actually. What did I do here? Did I leave my... Oh, no wonder I can't get it. All right, here we go. All right, so there you go. Well, you answered the question faster than me. That's even better. 66% Europe, 33% Asia. Okay, so let's go back and look at this now. So if I pull up the charts, what do we got here? So on the... Yeah, this is different, and it's because you got Europe weighting it down, right? Okay, and so I'm sorry, the question was, will this act like the GSPC and the IWM or not? I think what you're going to see here, and actually this goes in kind of a different, let me take it in a different direction. If we think about where we are in these markets right now, not technically but fundamentally, Europe is struggling, Italy in a recession, Germany being hit, as are some of the other major industries there in major countries. Not just because Russia, but certainly because of it. The sanctions are definitely hitting the European economies and hitting them in a big way. And those sanctions, unless they get lifted, are going to continue to cause problems for any kind of exports out of Europe, which necessarily affects France and Europe and Germany in particular. That's going to keep Europe, pressure on Europe, in addition to the pressure that was already there that Draghi was trying to address with his targeted LTROs and with the potential MBS buybacks, i.e. quantitative easing, that looks like it is coming. So Europe, unfortunately, is going to stay under pressure because now you have two sources of problems, one which was being addressed and one which isn't. So the earnings of those companies are going to be suffering as a result. Now, if you look at Europe, if you look at Asia, and you look at the United States from an earnings perspective, expectations, the economy's doing well there, doing well here. Expectation is that it's going to continue. We got a Fed that, you know, even though they're finishing up their quantitative easing in a couple of months, they are just gung-ho about keeping rates as low as possible, as long as possible. And you've been hearing that from the Fed speakers this week. So the expectation domestically and in Asia is that things are going to continue to grow. Now, in this particular one, you know, it's only 1/3 of the index, so it's going to suffer. It's not going to do as well. So you have to really just view this on its own account and say, okay, what is it going to do? Well, I think it's going to hit resistance and it's going to struggle, and it's going to struggle at those zones. If you look at these two, the August 1st, July 31st bars, that's going to be where the pressure is. That's probably going to contain it. You're going to contain it for now. Now, what may happen is the situation in Ukraine is going to come to a head at some point. Question is it get worse or does it get better? If it gets better, right, if the sanctions get lifted, stuff like that, Europe is going to fly. Right? They're going to have a huge rally, and this thing will rally with it. But right now, until those things get sorted out, this picture just isn't going to change much. So on an intermediate term time frame, you know, it's okay. It's still holding, and you know, the volume as it comes back in is not that bad. This does look like it will get some sort of a bounce. That probably comes more from Asia than Europe. But you know, that's the way this thing looks, and you know, if you're in it longer term, it's probably okay. You just have to hang around long enough. Let's look at the next one, Las Vegas Sands. It looks like. Let's see what that one looks like. So LVS was one that I actually was an example, I think, if I remember right, in my last book, and it was a big range. I mean, it was a big breakout trade, if I remember right. So anyway, let's see here. So daily comes down. Okay, this is ugly. Let me see. What are you trying to do with this guy? What do I think of it? I think you ought to stay away from it, is what I think of it. Yeah, and let me explain why. You've got swing points, right? Swing points are important. There's 4 of them. It broke every one of them. All 4. And that's on a weekly. That's pretty bad. That says that you should carry 2 to 3 bars to the downside minimal. Now, it was a big spike down, so far it's not really carrying yet. But even if it tries to come back, what's the first thing it's going to do? Well, it's going to do a retest regen if it comes back in, which it's doing. And that retest regen is more than likely going to regenerate lower. These lows are here, this low is there, that one's there. I can't see this thing getting above this area. So if you're in this, or if you're wanting to get in this, I would look for a way out. If you're wanting to get into it, I would only be looking at it from a short perspective. That's on the weekly. If we go back to the daily, you get the same thing. Here you've got the breaks, multiple swing points on multiple time frames. It's going to be more than 6 bars when it gets back here. That says it probably tests just to the lows. That's 71. Going back to the weekly, 71 is these lows. That's just what it looked like here. Now you confirm that by looking here. You get a bounce up into there and you're in this thing, that's where you want to get out. I don't know that you're going to get that bounce. You may have got all the bounce you're going to get. If you're looking to short it, yeah, I think it's worth shorting as long as, you know, the puts aren't too expensive. So I would take a look at it. Let me see how far on a monthly you can expect this to go. Okay, so on a monthly, you're going to get a retest regen after 6 bars, again, off this high. Okay, so that says more than likely you're going to find support, you're going to find buyers in that $62 area. So use that when you're constructing your play, right? $62 area is not that far down. So it seems to me like you really want to, you know, kind of hope this thing comes back up into these lows. That would give you the kind of trade. You catch that premium been taken off, right? Put your puts on and bang, you're back the other way. So that's the way I would be looking at it. And you're almost probably going to need to let it try to get up into that area, 71, you know, 70 to 71. That would give you the best setup here. Okay, I got about 5 minutes left. If you have some more questions, pop them in and I'll try to take them. Let me switch though to a couple other things that I have a chance to cover, and I usually don't. I was telling members lately that the better shorts are probably not in the indexes, but are actually in the sectors. And if you look at the sectors, and you can look at them in multiple ways, but the easiest way is just come over to resources. If you're logged in, go to market trends, pull these down, take a look at them and see what's weakest. And you know, you got energy, bearish, and sideways. It's already turned, right? These others are bullish. This one's already turned. So if I go look at energy, you know, I can look and see what XLE looks like. And I don't want to use the monthly. I'll pop over and use the weekly and pop in XLE and look at it and say, oh, well, okay, that's pretty interesting. So it gets under it, back over it, but hey, it's got more volume. What does that mean? It's probably going to test it again. And what's it doing? You know, it's pretty weak this week. Matter of fact, it was the weakest sector today. It's going to go down and try to test that low. So XLE would be an ideal place to be looking for shorts. And it would have been an ideal place on the bounce. It's a little bit late now, but you know, that's the sort of thing you want to be looking for. You don't have to go short just indexes. You can actually go some of these sectors, because DUG is the opposite of XLE, and it's something that you could trade as a 2-to-1. You could trade and try to get it back up into this area. You know, you pick it up down here, you try to sell it up there. If you look at what's inside this, right, the biggest weightings, ExxonMobil. What's it doing? Well, it's testing in the lows, doesn't have the volume. That says it's probably going to try to bounce. The bounce on this one, the key area will be right there on the way back up. That's the largest weighting in the sector. The next largest weighting, CVX. What is it doing? Comes down, tests down, can't stay down, also wants to bounce. So the weakest sector does look like it is going to try to bounce. And if you're looking at, you know, getting into that short position, the bounce, of course, is where you want to short. So if I pull it up, and I'm pulling up the sector where I have the weightings for myself, so I can see them. CVX is 12.89%, ExxonMobil's 15%, so you got 27% of the index trying to bounce tomorrow. Next largest weighting is Schlumberger, not XLB, but SLB. Oh man, my fingers don't work. Let's try it one more time, a little slower. SLB, what is it doing? It came down, tested, couldn't break, right? May test again, but that one's still holding. So does look like we're probably going to get another bounce, and that's a particular case that you could look at trying to short this thing. And so if I'm trading and wanting to trade on the short side and wanting to use something beside an individual stock, I would be looking for those sectors that are the weakest. You could go look at another one, and that's XLP, right? Suspect bearish, confirmed sideways. That one's already turned. Again, if we go look at it and see what it looks like, and then look at the weightings inside of it, you can see whether or not it's going to bounce. This one had an under-over on the weekly. That wanted to bounce. It's coming back into resistance. If we look at it here, XLP, same sort of scenario. What's it doing? Comes up, got decent volume. Looks to me like it's going to get back in finally. Ah, looky here. This is interesting. So this was a retest regenerate after more than 6 bars. And what did it do? Got over it, failed. Got over it again today, failed again. Had more volume though. So you want to let it test again, see, especially on the bounce tomorrow on the rest of the indexes. If it can't get over it and stay over it, that's the short setup. That's where you could pull the trigger, put on your options, your puts. You know, if it's not too thin. I don't trade options. But that's the sort of scenario that you could, you know, go find something that sets up nicely. That's a good setup. Okay? All right. Hope that helps. See you tomorrow right here. Same place, same time. I'm LA. This is, and it was, your daily NeoTA wrap. Have yourself a great night. I'll catch you here tomorrow. We'll do it all again. Take care, folks. Good night.